Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Lucid reported earnings after the market closed on Monday, and to be frank, there wasn't a lot to like about the report. We didn't get a lot of information from the company about how many reservations were in the backlog, and cash burn continues to be a massive concern. I just don't see any way that the company is going to get to free cash flow positive with the assets that are currently on the balance sheet and the trajectory of production. But that's what I want to get into in this video, is why I'm so concerned about Lucid. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And if you're interested in disruptive companies, check out Asymmetric Investing. I've got a link to that in the show notes. And that's where I'm highlighting stocks that have 10x potential in 10 years, which could be a company like Lucid. But let's get into the numbers here. I want to start with the first page of the company's presentation to investors, because this is the thing that I have been looking at with Lucid, is the key statistics. This is where the company is given a lot of information that just at a glance kind of gives you an idea of where Lucid's sitting. What you see in the last quarter, the top two aren't really a surprise. Deliveries of 1406, production of 2314. We knew that from data that had been delivered before. As a result, revenue, not all that surprising either. Vehicles are about $100,000 a piece. This delivery number gets you to about $149 million. Not a big surprise. But here's the reason that I don't like what I'm seeing here. This is a quarter ago. This is the fourth quarter 2022 earnings report. Key statistics shows things like reservations, potential sales. This right here tells us how much demand does Lucid have. And in the fourth quarter of 22, we saw that reservations and potential sales fell from the third quarter of 2022. So what happened in the following 3 months in the first quarter of 2023? Well, we simply don't know, but it's likely, given the market trends and the pricing trends that we've seen across the market, that demand likely fell further. And the fact that management simply isn't telling us what's going on, didn't say anything about it in the earnings release, that's really telling to me. Rivian did the exact same thing. And I think investors should really question how much demand there is for these vehicles right now, because it's not a certainty that the company is going to be able to sell everything that it makes, even if it can produce as many vehicles as it eventually wants to. And onto that production number, this is the other thing that jumped out to me. So in the fourth quarter, the company produced 3,500 vehicles. If it was able to do that for a full year, that would be 14,000 vehicles for a year. So what did Lucid produce in the first quarter? Fewer vehicles, 2,314 vehicles. And if we go down here to guidance, management says that the production is only going to be about 10,000 vehicles for the full year. So in the fourth quarter, the company was producing a run rate of 14,000 vehicles. And then for the full year of 2023, production is going to be 10,000 vehicles. That means that production isn't actually ramping up at all in 2023. It's just basically remaining constant or even falling a little bit. There was a lot of discussion about two things in this earnings presentation and the earnings release as well. One is new products. So talking about the new products that are going to be coming later. The Lucid Air Pure is highlighted here for the second half of 2023. Lucid Air Sapphire beginning in summer 2023, and then an SUV that's going to be shown to us later this year and then start production in 2024. So that's a lot of talk about potential growth, but the company hasn't shown that it can actually make the vehicle that it actually has on the market right now. This is the other thing that was talked about a lot, is liquidity. Now, liquidity is basically how much money does a company have available to run its operations. So you can see the information here, $3.4 billion in cash and investment. And then there are borrowing facilities that get that liquidity up to $4.1 billion. You can see that they call this a history of prudent liquidity management, but really this is just raising money over and over and over again. I think this is something that a lot of investors are falling back on, is that with a 60% ownership and billions of dollars invested in the last few years, the Saudi Public Investment Fund is probably the backstop that the company is looking for. So if it runs out of money, the Public Investment Fund could just buy Lucid. At least that's the theory. I don't know that I buy that, but this is also one of the reasons that there's a manufacturing facility being built in Saudi Arabia right now. Here's the other page that I wanted to show. This gives us a highlight of everything that we really need to see: balance sheet, income statement, and then also the cash flow statement here at the bottom. I talked a lot about the balance sheet and the amount of assets that are there. The income statement, $149 million in revenue, cost of revenue, $500 million. So that implies that the company is going to have to increase revenue to at least $1 billion just to be able to break even on a gross margin basis, because there would still be added variable costs that would go into that. $1 billion in revenue on a quarterly basis, that'd be about 10,000 units given the current sale price. Remember that management said they're only going to produce about 10,000 units for the entire year. And this is quarterly numbers that we're looking at. So they're nowhere near getting close to positive break even. That doesn't even account for paying for R&D expenses or sales and operating expenses. So we see this huge loss of $780 million. And then free cash flow, so you add in the capital expenditures that are being put in the ground right now, over $1 billion in negative free cash flow. So remember that liquidity number, $4.1 billion. That's about 4 quarters worth of free cash flow at the current run rate. There's a lot of competition in the electric vehicle space, and the companies that can ramp production quickly and get to free cash flow break even have a chance to really make it and grow in this market. But I think what we're seeing right now with Lucid is the company is not able to ramp productions very quickly. We don't know what demand looks like for this very expensive vehicle at a time when demand for EVs seems to be dropping overall, and there's a lot of pricing pressure from a lot of the production across the world in the electric vehicle market. We're seeing these $80,000, $100,000 vehicles just not sell in the way that they did or that we anticipated they would a couple of years ago. So I think that's a real concern. Is from the demand side, is there even demand for Lucid to be a free cash flow positive company ever? I don't know that we have the answer to that yet. But what we've seen right now is, at best, Lucid has a little over a year worth of cash left on the balance sheet. And after that year is over, I don't think that we have a free cash flow positive company. So it's going to have to find more funding. I don't know where that funding comes from, but right now with the stock falling, it was falling after hours on Monday. Public investors don't seem very interested in funding this company's operations going forward. I just don't see a lot to like here. I don't see a lot of silver lining. It's not like we're seeing reservations grow or sales grow at a really rapid rate. We're going to be stuck where we are right now for the rest of the year, according to these numbers and the projections from management. This is absolutely a stock that I'm not buying. I don't think that the risk is worth the reward for investors. But I'd love to hear what you thought about Lucid's quarter, especially compared to some of these EV competitors. Leave those comments in the comments section below. Don't forget to subscribe to Rive Investing and check out asymmetric investing in the link below. Thanks for watching, everybody. I'll see you here next time.